In this video, we are going to be analysing Carnival Cruise Line's ticker CCL. Now, this is key, and why I'm doing analysis on this today is firstly, it is up 13% today. Again, where did this move start happening? 8:30, what happened at 8:30? CPI came in less than forecasted. And again, this is good to stocks because firstly, it shows inflation is lower. And why is this a good thing? Because inflation is lower, the Fed is less likely to hike. If the Fed is less likely to hike, that is bullish for stocks because again, the stock market is heavily related to interest rates. If interest rates are hikes, companies don't really borrow as much money, and any debt they currently have outstanding is going to get more expensive to have. So that's why interest rates matter so much and inflation matters so much to the stock market. But what is really key now on Carnival Cruise Lines is we're coming to this $10 mark. Now this is key because it is our first deviation on the 6-month chart. So if we were looking to trade this bearish, this is that level we would look to start trading it short. And why do I say if we're looking to trade it bearish? Because you can see by these deviations, these always give us the clear sense, because then you don't even need to look where the candles are. If these are heading downwards, it shows you that over the last 6 months, it's been in a downtrend, considering it's also on the year. For the past 6 months and the 1 year, we have been downtrending on Carnival Cruise Lines. So that's just an easy way to use standard deviations. You can just quickly see the overall trend. And we can see the overall trend in the last 6 months and a year is bearish. If you're someone who likes to trend trade, then that $10.20 could be a good short level to maybe get in and follow that trend if we continue down. Now though, if we break it, and more the level I would be a bit more focused on is this 1180, because what is this doing? This is not only a pivot level, because I mean we have our support here, we try to tap it a few times, but this is really just a key zone. We can see we've tapped this level now for, well, 1, 2, 3, 4, 5 times. We look like we're coming into it for a 6th. Now this is going to be key because again, it could lead to that another seller, follow the overall trend. However, if good market news comes out, we could see a bullish push, and if so, I do think this will be its breakout area. We would have a target of $14.50, going on to 17, 18.60, $22, and a final level at 27. So again, these would be our key upside targets. What are going to be key supports? $6 and $6.50, they're really going to be the key ones, near that 52-week low, statistical mean on both the 6 month and the 1 year. And if we break that, we do have a first deviation at $1.65, but really I don't see us going that low. So instead, I would be looking at the key psychological levels as support. So $5, $4, $3, and so on. Now, again, there is a lot of levels provided here. Do you need to pay attention to all of them? No. Pay attention to what we are closest to. So we're currently between 650 and 1020. So all I'd be focusing on right now, we are more towards this 1020. This is our target. We expect to move to it. When we come into it, the initial tap, we expect to be a bit of a pullback. Again, could be a reversal, but a pullback at a minimum is expected. If we start to break this, we would expect a break, come back to retest it as a support, and then again, we would look for that bullish move down to up to 1180. Now, this would be that key zone, and what I would really be looking at for Carnival Cruise Lines. If we can break this, we want to see a break above. Again, if you trade the initial breakout, have your entry reasons for that. I'm personally someone who looks for that second wave. I look for that retest. And so what I'd be looking for is a break of 1180, come back to test it as a support. And if it can hold, then really I have good upside. And this is what I'd be looking to play, probably through options. But that on a share basis gives me 22.5% upside from those deviation differences. So if I'm looking to trade that through options, I may trade that through a debit spread if I'm going to limit risk, and depending, or credit spreads, again, just depending on how kind of expensive options are, because if I'm doing credit spreads, if options are expensive, I can make money by selling expensive options. However, if options are cheap, then I may look just to trade it as an outright. By that, I just mean buy some calls, $14 strikes, and I would look to play that move, because if it's making $22% on shares, you could be easily looking for 100% plus on the options plays, as long as the options are cheap. And that's really the important thing to note, because over the last few months, option premiums have been expensive. And that's why when I've been doing option trades, which is one of my main focuses, I've been looking at selling the options. So a lot of my trades have been credit spreads, because again, if premiums are high, I want to be selling. If premiums are low, I want to be buying. That's how you look at the options market, and that's how you don't get too screwed on directions and kind of just on prices, because obviously if you're playing with premiums, you need to be understanding how the premiums are working out. And if premiums are high, again, you're probably better off selling. If premiums are low, you're better off buying. Anyway, hope you enjoyed the breakdown on Carnival Cruise Lines. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.